Joining us now, David Strzeski, CEO of Sound Planning Group, a financial services firm. David, welcome back. Another day, another roller coaster on Wall Street, especially as Halloween. What do you make of today's activity?
Well, today is another very interesting day. We've obviously had this incredible month, best since 1976. Love that. As we're looking at things today, Meta's down again. Obviously saw Microsoft take big hits here. I think that what we're seeing right now is we're seeing, Chairman Powell could have been dovish, was really the expectation, and that is what really drove markets. Obviously, we're going to see what happens here in the next couple of days. But I also think that we need to be paying attention to the fact that October traditionally tends to be a pretty strong month, especially as we move into midterms. And so we're obviously expecting, or at least polls are expecting, a red wave, which would mean that there would be more of a neutralizing. So, President Biden would obviously keep power, but he would be losing some of the Congress, the House potentially within that. So maybe there's a sentiment amongst people here today that yes, that's a good thing, but maybe it's cooling off and it's not quite enough to keep things running.
Today was the final trading day for the month of October, with the Dow soaring its best performance since 1976. What's the reason for this year's comeback, David?
Well, it's in part for what I just said just a moment ago, that we had, this wonderful October with the Fed potentially pivoting, but then ultimately what was interesting is that the NASDAQ underperformed by 10%. So I would just even say it's kind of interesting. We see a shift right now in what is in favor or not, and fundamentally, these companies like Meta are not standing up to, things in the very same way that some of the big organizations like the Dow, and not even the biggest names in the Dow, but the Dow has ultimately been producing with. So, these are important things for us to be looking at right now. But I don't think that we're seeing much more than just a bull bounce in the midst of what is a recession, at least based on how we used to define them, and what most people think that we're ultimately headed into. So it doesn't seem like a super peachy world right now, especially given some of the new information that came out about housing. And so maybe that's another part of the reason why things are beginning to taper, is we are seeing 86% fewer loan applications year to date than the previous year, which is staggering. But more importantly, we're seeing more inventory show up right now as the housing purchases have hit their 2010 low. So that number just came out on Friday.
Staying in the month of October, the S&P rose 8%, the Dow rose 14%, the NASDAQ rose 3.9%. Is it safe to say that the bear market is behind us?
I don't think that the bear market is behind us. I think that we are in a global recession right now, and we may refer to this time frame in history as the Great Global Reset, as we just have so many different headwinds today that are taking place. Look at our friends in UK that are sitting here experiencing 16, 17% inflation right now. One thing to also understand is that our oil prices have been down in the United States over the last several months as a result of some of what the Biden administration's been doing. Is they've been selling oil from our strategic petroleum reserve, and ultimately we're sitting about half of what we would normally have, and so that's a record low. But one last concern here is that we have literally 3 weeks worth of diesel left, according to reports. November 21st is going to be the day that the United States will run out of diesel fuel, which, if any of us understand how important that is, that's our semi-trucks, that's generators, that's fuel, that's heat as we're heading into the winter, and we don't really have an answer for it. But I will share with you that there's a little bit of oil left in that strategic petroleum reserve, enough to last 6 hours.
So when and how do we know if markets have bottomed?
I think that what we will see is we need to see the Fed begin to taper, right? And that's not going to happen until we've meaningfully seen inflation be reduced. And so right now we've seen it kind of go down a little bit, but is that because of the oil? The Saudi Arabians think so, and so that's a problem. When do we see it turn though? Well, the Fed's going to have to pivot. Additionally, I think that we're going to need to see some supply side adjustments here. The United States has all the tools to affect supply side. It just seems like we're politically motivated to not be doing it right now. And so that's a real big challenge to our nation, because, as an example, if we got oil figured out, if we just started, producing more at home, well, then our allies would have more. The price would go down. Putin wouldn't have the same dollar to be able to wage a war with, which, because he can't have a war if there's not high oil prices. We would become more stable as a nation again. And so I don't think until we see supply side changes that the demand impact that the Federal Reserve is doing, it's just not going to allow the consumer to really make some, these things happen. And we are drowning right now in inflation, specifically from those that are in the low or middle class. And this is just an erosion right now, as we have 2 years of this high inflation. That, if you're just even hitting 8.3 a year, which we're higher than that for sure this year, you've lost a full paycheck each year, or a full month of paychecks actually each year. And we're now 2 months into, or 2 years into that. So I'm very concerned about the American consumer right now. If we do not get some things figured out, if we cannot get interest rates lower on housing mortgages, just understand this: housing is a lagging indicator of economic health. And when we get numbers that come in and say that we have the lowest housing sales since 2010, well, then that should cause us to pause for a moment. And the biggest difference here is that the Federal Reserve has raised the rates so fast. And so if they're going to continue to raise rates quickly, if we're going to continue to see heights of maybe 4.5%, 5%, potentially higher than 5% from the Fed funds rate, I don't think that we're out of the woods quite yet. So Jamie Dimon might have had it right that we're in the middle of an economic hurricane right now, and we need to kind of brace for a minute as this impact is continuing to unfold. And I think that the data is ultimately coming in right now.
David, as you well know, earnings season is in full swing. We have some results from big companies in different sectors. Your biggest takeaways?
Well, I think that earnings have been mixed, right? So we've seen some good, we've seen some bad. Companies that have been bad have been hit. But could we think about this maybe from a step back for a second? We just talked about inflation. What about inflation adjusted earnings? Because see, I own a company, my wife owns a roofing company actually. And so what's amazing is they're going to have record sales this year, but they have the exact same amount of crews, the exact same amount of jobs. And part of the reason why the amount is higher is because, well, the prices of everything have gone up and they had to charge more effectively. So if we think about that and abstract that from earnings right now, when we look at 8% earnings and maybe a 2 or a 4% growth, hopefully it's positive, not negative, I would say that that's actually a confirmation that we went backwards. And so the economy is able to project, and of course we're driving forward, but we're looking through the rear view at a month or two ago's CPI. We're going to take a look at JOLTS. We're going to be taking a look at a lot of these different things as they're coming out right now. And I just don't see an awesome backdrop unfolding when we look at this from an inflation adjusted or a real expectations of what we should be receiving.
The Federal Reserve is meeting again this week. Another rate hike may be on the way. Any chance it will pivot or pause this time around, David?
I vote that they pivot or pause. I feel like they would be intentional to understand that we're in some challenging places, but the Fed is really in a challenging place, because let's just say that they do pause. Okay, so what happens is stock market's going to go through the roof. That's the exact opposite that they want. Treasuries will reduce. People start spending more money. Can't do that. I think that they're going to come in strong. I think that they're going to stay steady. I think that the Federal Reserve is going to be very clear that they are going forward, that they need to see a 1-to-1 unemployment ratio to those that are seeking. We're seeing, not quite a 2-to-1, but obviously we'll get the numbers here tomorrow. I think that the Fed is going to just continue on as they've shared. But note this: they definitely know how to pivot. And Canada I think it was last week on Wednesday, did pivot. They did a 50 basis point instead of a 0.75. So, hey, Canada just did it. I think that there's observations that there can be some cooling, but at the same time, the Fed does so, it could be very, very bad, because the markets will go up, and that's what they're trying to not have happen. They need to destroy demand, and they need to ultimately inhibit the consumer from spending more money. That's not a great story for the consumer, but we need to get our economy just right. And unfortunately, the balance sheet is still full as well. Trillions and trillions of dollars that they've not yet offset. So it doesn't look like a great picture here today. I wouldn't want to be Chairman Jerome Powell. He was about a year late from starting this these increases that began in March, and we can't go back and redo it again. We have to, play this thing forward. So I just wish and hope that supply side economics would come into play, that we could loose up some regulations and not put more on oil companies, not add 87,000 IRS agents, which ultimately kind of tells me that they don't think that the U.S. people are doing things appropriately or right. So that may be a significant surprise to us as we start 2023 and we look at a much higher tax need that the Internal Revenue Service is going to need to be generating, given all the spending that's taking place.
David Strzeski, CEO of Sound Planning Group. We always appreciate your insight. Thank you so much.